Welcome back, passive income investors alike. Today it's Halloween. We hit 1,000 subscribers. Thanks to you guys. We should do some 1,000 sub celebration. We're actually going to go over my YouTube channel in the next video. But for this video, we're breaking down all-time highs. Baby, is the account currently sits at $119,500 with a drip annual yield of $5,575, which is up $10 in dividends from last month. And the portfolio, my goodness, guys, even with some of my worst performing positions, we're doing so well. And consider slapping that like if you enjoy my merch. This is like limited edition shirt, by the way. I don't think you can find these anymore, and I only get to wear it a couple times a year. So consider slapping a like if you enjoy it. And I hope you guys are dressing up for Halloween, because it's been an exciting earnings season, guys. So I mean, you should be excited. Hopefully you're doing well. Getting a cool maybe like chart mask on. You're going to get a mask that's just a chart with earnings on it or something. I don't know. I think it'd be hilarious. I need to get like an earnings shirt. But we're going to go over Facebook, Apple, and MO's earnings in this video, along with my six-figure dividend stock portfolio today. And I just want to remind you, at the beginning of this year, my portfolio was at $104,000. So, I mean, this is crazy. We're going to start with the tax-free savings account, which is in all-time highs right now, sitting at $91,000. Absolutely incredible, considering you're only allowed to put $61,000 in this account. So we've had some crazy capital gains going on. And I'm going to tell you some of the positions that I bought, things I moved around, starting with the banks. I sold some Bank of Nova Scotia to buy RioCan recently, which I talked about, and I'm going to slowly continuing to cost average into these REITs. I just want to be careful with what REITs I'm buying, because I don't trust real estate a lot right now. I think a lot of the real estate is majorly over inflated right now. So I'm just being patient with it, slowly cost averaging into the giants. Now, this REIT specifically isn't paying like a huge dividend yield. It pays monthly, and I mean, it's not like the biggest growing one either. You could compare it to like something like Realty Income, but I need more Canadian qualified REITs, so that way this income is tax-free in this account that I can use whenever I want. So I just want to continue like leveraging my portfolio in a way that I'm not so overexposed to these three Canadian companies, which is Bank of Nova Scotia, CM, and Northland Power. So I want to make sure that this thing is nicely balanced, and I think this is a good REIT to add. The yield's obviously not as high, but like I said, I know it's stable in recessionary periods. It survived the '08 crash. A lot of these high-yielding, small-cap REITs, they don't have the track record, which makes me a little on edge, and they're a little more leveraged than something like a RioCan. So I love that. Bought some of that with the selling of the Bank of Nova Scotia. Now in my U.S. positions, we're talking Altria Group, doing really well. We're going to go over its earnings in a bit, along with Apple. But I mean, overall, everyone's getting a little more bullish on these companies. I think they've hit a bottom at this point, considering I honestly don't think this company is going to see these lows for much longer. But we'll go over that in a bit. Same with Apple. It's just been crushing it lately, guys. Like, absolutely crushing it. If you bought into that, congrats. But I hope you've had it. I hope you've had it and you're not just buying into it now. Like, you should already be holding on to that. I mean, my average buy on it's 172 right now, and I used to hold it in the 140s, mind the way. Like when I transferred money around back in the day, I've been holding Apple for a long time. BTI, we'll go over that in a bit as well. GEO is one that I bought this morning. A lot of you do not like my position in the prison sector right now, but every time I buy a company and I end up in a situation like this, I get a little on edge. Obviously, I always do, but when I look at the news and then I compare it to the balance sheet and see how much is affecting the balance sheet, this company continues to make more money than they ever have, waiting for their earnings to come out as well, I believe. They're still on the run. I'll have to keep an eye on that for now. But overall, guys, I had to buy more, and the dividends coming out that I have on a drip, so I'll be getting paid in shares. Actually, tomorrow, November 1st, is when it pays out the dividend yield, which is absolutely unreal. I'm not telling you to buy this company, guys, and I'm not going to do a whole video on it right now. I just really love the company. I believe in the company. I understand what they're doing to an extent, obviously not fully, but I get what they're doing, and I just don't think it's going anywhere anytime soon. Plus, this company's had a long track record. It's been around since the 80s. It's not new to the news that it has, and it's making all-time highs on revenue. So, I mean, I'm just going to keep an eye on it. If the balance sheet changes, I'll consider selling it, but currently nothing's really changed from my position on it, so I'm just going to buy a few more and continue building it into a full scaled position within this portfolio. Southern Company, still doing really, really well, guys. Southern Company and Northland Power, my utilities are doing pretty good. Still holding the accounts up. So moving into my least favorite account is my managed account, guys. This account has been the worst performing account this year, but I haven't been holding these positions for very long, so I'm not going to batter myself too hard on it. We're only down $1,298 Canadian, not US, thank God. And like I said, I'm going to start moving these positions around. We're going to take J&J and we're going to take Starbucks. Mind you, they both did pretty good on earnings, which is nice. I wish Starbucks would get up a little higher, because I'm going to sell these move them into my RSP account, and I'm also going to be selling off before the end of the year BTI, which I'm moving into my RSP account, and Tesla's going to stay here. I really like Tesla, and I will be buying more shares at the end of the year. God, I made a video not that long ago where it was sitting around that 170 mark, 180 or whatever, and I'm like, if you buy it around here, it's probably not going to hurt you too bad. I just didn't have the capital for that then, and the way I wanted my positions to be this year. So, I mean, I'm glad that I have the position I have. I'm going to be buying more of it before the end of the year, and not a huge position. It's just going to be a long-term hold. I don't want it in a registered account because, well, my RSP, because if this thing explodes, I'd rather just pay the tax on it and have access to that capital. But J&J and Starbucks definitely going in the RSP account. BTI, because I have enough exposure to these companies in my my tax-free savings account here, I'm only going to put a little bit more into this next year when I can add more money to it. But I'm going to get rid of BTI out of here and buy more of the index funds. I'm going to start loading up more on VFV soon. I really want to scale this up to a full position as well, probably between 8 and 10,000. And then my final account and the dead final amount here is 3M that I bought on your behalf. Sits in this account here, and I've added some more capital as well, but obviously I only added $489 CAD. I already had 125 US in here, so that doesn't really equate to much of the equity value, because obviously if I'm sitting at $119,500, well, the 500 or the 489 doesn't equate to a lot, just to show you that it's not me adding to the account that's growing the account. So I mean, really well. Now 3M has been really volatile to watch. I don't own a lot of it, but like I said, you guys voted on this and I bought it on your behalf. So it's 664 US dollars I put in here. Currently the dollar, I'm down $12 on just the currency exchange, and I'm also down slightly on the dollar amount right now. I got a good buy price in it. I think I bought it in at 162 or 3 or something like that. It was really cheap, and it's gone from like almost 170 down below almost 160 there in the 150s. But I'm happy holding this company for now. I do like it. I don't got a problem with it. Maybe sell it down the road if it pops up, because it's not my favorite company of all time. But we'll see what happens. Like I said, I'll keep it as a little bit of a long-term hold for now. For you guys, of course. And then let's move into the earnings. I don't want to keep going on about this. I could go on about this stuff for days. So let's just jump into the most exciting thing, which is Apple earnings, guys, to start with. Services is what kept this company exploding. If you don't know, guys, they did $3.03 per share on earnings with a $64 billion quarterly revenue, which is absolutely incredible. But the reason they've done so well, their iPhone sales are dropping. Obviously, their phones are getting so advanced and they're so expensive. People aren't rotating through them like they used to. So we've seen about $1.5 billion drop in iPhone revenue, but where they made up for that was services that did 12.5, which was up like $2+ billion, which really made up for the losses in phone sales. So I mean, Apple continues to be muy bien when it comes to managing their company, but I'm sure you've heard all about this, guys. So long as the service business keeps growing, they should do okay. But I wouldn't be shocked though if we get to a point where all of a sudden like their earnings flip, because who knows, if services caps out for a month or a quarter at some point and phone sales keep dropping, we could see Apple take a big hit at some point. But we're not there yet. Definitely not there yet. Then more excitingly, guys, we have the earnings for Altria Group. Altria Group is one that we were waiting for. I'm sure many of you that watch this channel have been excited to see Altria come out with its earnings, which popped off this morning, guys. And man, if you Googled their earnings, the analysts were really battering this company into the bloody ground. I mean, couldn't get over how bad they were beating this one up. But now we're up 0.3% from 2018 on this quarter's revenue with $6.856 billion for the third quarter of 2019, guys. With revenues, net excess tax is $5.412 billion, man, up 2.3%. So this company has been crushing it. It is one of my largest holdings. I mean, I got $30,000 sitting in the tobacco sector right now, and I buy more of it. Even at these levels, guys, I'd be buying more Altria Group. I just can't bring myself to do it because it's reached beyond scale in my portfolio, and to keep things nicely levered out and everything at a balance, I'd rather not start over leveraging any more than I have. So I mean, you can let me know what you think in the comments section below, because oh man, I thought we were going to have a haunting earnings season, but it's been absolutely delectable. It's been really good, guys. So to finish up, we want to take a look at a few of the other positions as well. I'm sure we've been watching Bitcoin. If you haven't been watching Bitcoin, I've been kind of keeping an eye on it in the stock forums here because it's been hilarious. Also been watching SPCE. If you don't know this company, Virgin Galactic just launched a space travel company. I don't think it's going to do that great overall, but I mean, it launched as the first public space travel company that's ever existed. So you should check that out if you didn't watch my video yesterday. But the index is doing pretty well. I'm surprised Apple is still holding up, which is nice because the rest of the markets have come down a little bit today. Overall, though, things are doing pretty good. I'm surprised with all these reds. My accounts are still pushing all-time highs, which is beautiful. If we keep scrolling down, Starbucks had their earnings, which I didn't mention on, but they did good on earnings. They brought the company back. TNT. You guys kept telling me about TNT. Now, the reason I haven't bought this stock over Ryokan is because it doesn't have the history, and I'm waiting. If it drops back into the 680 level, it might be worth buying. But because it hasn't been around for as long, even though I really like the real estate, and it pays an 8% dividend yield, it's still always hard for me to push over into that side just yet. If a good enough stock drops, I'll average it in along with my Ryokan as well, but not there yet, guys. Not there yet. Moving on here, we got what else is going on in the markets? We've got the marijuana markets are still taking a hit, a really big hit, unfortunately, not doing as well. Constellation Brands must have had bad earnings, man, because their stock has been tanking. If you guys remember me trading this, I bought it in the 190s and sold in the 2s. Made some money on it. I really wish this company could continue to do well, but I just can't see it in the short term. I think there's going to be a lot of volatility. We're not going to see the growth rate it used to have just because Canopy's dragging it down. But Facebook, guys, I own Facebook in my parents' portfolio, and I want to start leveraging it out. A lot of people like Facebook. They have a balance sheet that is bar none. Like, can't really compare anything to Facebook's balance sheet, but I'm not holding it personally, and I only hold it for my parents. Just because I bought in it, because it was so cheap when I bought it for them. I mean, I bought one on this big dip at the beginning of the year here, guys, when we were looking at it in the 130s. I think I got them in at around 160, I don't know, 170. I got them at a really good price on this. So I just wanted to hold it for a short-term kind of swing trade. I know it might do really well in the long term, but you got to remember my parents are in their 60s, right? And I want them to be able to have access to capital so they can actually, enjoy their lives a little bit. And I'd rather hold a company like an Apple or a Microsoft. Sure, the dividend yield's not huge, but you use those companies to help excel the growth of your portfolio while you hold your dividend companies like GEO Group, like MO. Those ones might be more volatile, but it'll average out with those larger growth companies. So, I mean, I'm going to get rid of it for them very soon here. I was hoping it was going to hit over 200 today. Didn't see it happen, even though their earnings kind of crushed it. Did great on earnings. So, I mean, we'll just sit, be patient, and see what goes on with that. Other than that, guys, Google not doing nearly as well. Amazon, there's a lot of red stocks. So, I mean, I really want to know, is your portfolio doing good, guys? Hopefully it is. I hope you're enjoying your Halloween as much as I am. Halloween's my favorite time of year. Love my my limited edition Shirtiano here. And slap a like, guys, if you're a fan and you enjoyed this video. I'm just doing something quick for today, guys. I got a lot to get done. So stay cool. Stay awesome. I look forward to chatting to you real soon.